What's going on, Gems? Cooper with VVS Academy. Wanted to make a quick video today to highlight one of our favorite strategies at VVS Academy, which is of course the Elliot Wave Principle, which was founded by Ralph Nelson Elliott in the 1930s. Ralph Nelson Elliott founded this strategy by analyzing early stock data and identifying patterns in large indices like the Dow Jones Industrial Average and the S&P 500. So let's hop over to a chart so I can show you how this works. Now here we are, guys, on Euro USD. Now the Elliott Wave Principle responds very well to indices such as the S&P 500, but I figured that might be a little bit too easy, so I pulled up a currency pair that works well too. So the basis of the Elliott Wave Principle is 3 impulse move, 2 retracements to create a 5-wave pattern, followed by a 3-wave corrective movement. Now on TradingView, if you go over to this patterns and you hit the arrow, it's nice. They have a Elliott impulse wave option, 1, 2, 3, 4, 5. And here is the general premise of the Elliott Wave Principle. An impulsive move up, retracement, another impulsive move, retracement, last impulse move. Okay, so that's 5 waves. And then up here you can see this is marked by Roman numerals. This is for more advanced, but there's all these varying degrees from super millennium to minuscule degrees, and that changes the notation here. And we'll get into that more in a later video. But then you can also go back over to this pattern area and you can choose Elliott corrective wave, ABC. So after these 5 waves, you have a corrective pattern, A, B, and C. So I pulled up this area on the chart, and what we can see is an impulsive move from here to here, a retracement, another impulsive move, another retracement, and another impulsive move. What we then have is a corrective movement in the form of an impulse move, a retracement, and an impulse move. Does this shape look familiar? Hopefully you guys are starting to see the resemblance here. So what I can do now is I can delete all this. So now that you guys know the general shape of the Elliott Wave pattern, there are 3 golden rules that must not be broken in order for a movement to be considered of Elliott Wave fashion. I'm going to go over to our patterns and choose the Elliott Impulse Wave pattern here so that I can mark this up and go over the rules with you. So we have our 1, 2, 3, 4, and 5. And then what we have here is, let's check our rules. So number 1, wave 3 cannot be the shortest impulse wave. So let's go over here and here to here. We're going to go ahead and make sure that this is not the shortest. So if we pull it over here, step a little bit, we pull it over here, we can see that impulse leg 3 is definitely longer than 5. And we'll move it down here, and you could have eyeballed that, but it is definitely longer than 1 as well. So we're good there. Number 2, wave 4 cannot retrace past the end of wave 1. So what that's saying is right here, from 3 to 4, wave number 4, this cannot retrace past the area where wave 1 finished. So cannot go past this area that wave 1 finished. And as we can see, it does not. So we're good there. Number 3, wave 2 cannot retrace more than 100% of wave 1. Well, we have wave 1 starting all the way down here at this line. That wave 2 cannot retrace more than 100% of this movement here. As you can see, it does not retrace past this line. So we're good. This is an example of Elliott Wave, and we're not breaking any of the rules. Now, in addition to these rules, there are several tendencies that often play out in the real world, but they do not need to happen in order for a pattern to be considered Elliott Wave. These are the 3 and only rules that must always be met in order for a movement to be considered of Elliott Wave fashion. Let's hop on over to USD CAD, United States dollar versus the Canadian dollar. I wanted to show you how this works in the other direction. So here's an example on the daily time frame of a 5-wave structure down, 1, 2, 3, 4, 5 down, followed by a 3-wave correction pattern in the opposite direction, A, B, C, up. Now the Elliott Wave Principle does respond a lot better, like I said, to indices such as the S&P 500, but I wanted to give you 2 different examples here on 2 different currency pairs. It's a very sad day when our Instagram business account gets deleted without any warning, so we've gone ahead and made another one. We're starting from scratch. If you're feeling generous, please go ahead and follow. Put the handle up here as well as linking it in the description. If you'd like to subscribe, we'll love you forever. If you hit that like button, I owe you one. If I missed anything or if you have any questions, please join the conversation below in our comment sections, and I'll see you later, guys. Thanks for watching.